So with respect to our partnership with Nakisa, as I mentioned, we have been very satisfied and very happy with our migration to the cloud. The product is extremely stable and definitely has allowed us to move from a very unstable environment to a very stable environment with virtually no interruptions since we went live last September. So from our perspective, what made this project a success was, one, using that lift and shift approach. Working very closely, not only with the Nakisa functional and technical teams, but also our IT team. As I mentioned, we didn't have on-prem Nakisa experts, but we do have SAP FICO leads that supported us in this journey, as well as Basis, ensuring that the back end was structured the way that we needed it to, not only from a governance perspective, but as well as a communication perspective between us and Nakisa. So as a recap, really what we are looking for with respect to Nakisa and our leasing solution is a one-stop shop that meets both operational and accounting needs in terms of managing our lease portfolio, managing when leases are going to expire, being more proactive by leveraging the data that is now available systemically, as opposed to in 5 or 10 Excel spreadsheets, so that we can minimize costs as well as enhance relationships with our lessors, to ensure that we have seamless integration with respect to our SAP reporting solution, that Nakisa is able to scale and grow with us as we acquire more entities. And then just to continue to have robust accounting, reporting and disclosure needs. Because we report in both US GAAP and IFRS, we have to put together full disclosures on a quarterly basis under each reporting standards. And all the out-of-the-box disclosure reports, in essence, fit those needs. Coupled with the new activity report and that periodic posting report, those are two reports that they're part of our control environment at the end of the period, to ensure that the general ledger is what we would expect it to be based on the leasing details from Nakisa.